Hey guys, quick question. What if I told you there's a secret trick to save thousands on your mortgage each year? Intrigued? Well, stick around because today we are revealing how to get rid of that pesky PMI and keep more money in your pocket. Hey, I'm Hamza Riyasat at Echo Realty Brother, your go-to realtor in Metro Atlanta, Georgia. Without wasting much time, let's get right into it. So first of all, what is private mortgage insurance? Private mortgage insurance, or PMI, is an additional cost added to your mortgage when you put down less than 20% of the down payment. But remember guys, it is to protect the lender, not you, in case you default on the loan. So it is basically an insurance for the lender that you guys have to pay. And when it comes to paying off your PMI or getting rid of your PMI, there's only two ways you can do it. Method number one is the most commonly used and known is the traditional route of paying down your mortgage to the point where your loan to value ratio is 80% or less than 80%. But this typically means you need to come up with a large, hefty amount of money up front. Think of $60,000, $80,000, or even more in some scenarios. Let's say, for example, you bought a house for $500,000 and you put a $15,000 down payment, which is in this scenario 3% down payment. That means your loan now is $485,000. To get rid of your PMI over here, you will need to pay an additional $85,000 upfront to get rid of your PMI, which can be very daunting and hard to come up with such a large amount of money quickly, especially with today high interest rates. This is where method number two comes in. This is where things get interesting. Method number two, do you know you can potentially get rid of your PMI by getting your home appraised? If your home value has increased enough that your loan might now be less than 80% of the new appraised value, then you can request a PMI removal. Let's say, for example, over here, it's the same house, but instead of paying down this large hefty amount, let's say you don't have the money, you wait a couple of years, let's say 2 or 3 years, and you appraised it, and now let's say the home price came to be $600,000. Since you waited, let's say 2 years, and this you also been paying every month, this dropped down to 480,000 now. Since in this scenario the loan is less than 80% of the current home price, you can request your PMI removal. And the benefit of this approach is you don't need a large down payment. The PMI appraisal system usually costs about $100 to $200. Some bank might even do it for free. There's two types of PMI. There's a home appraisal PMI, and there is a PMI that the lender makes you do it once you buy a house. That PMI is usually $500 for a primary residency, $700 for an investment property. But the home appraisal PMI is a very light PMI. The other one is a very heavy PMI. With this PMI, it usually costs you $100, $200. It's the very 30 minutes, 1 hour PMI. It's an appraisal system. So there you have it, guys. Now imagine what you can do with that money that you saved up. If you did it with method number two, you can invest in home improvement, pay down your mortgage faster, you can buy another investment property, you can even take a well-deserved vacation. So there you have it, guys. Two ways to say goodbye to your PMI. But remember, every situation is unique, so don't forget to consult with a trusted professional real estate like us at Echo Realty Brother. Thanks for watching.